Hello and welcome to another edition of Stockwatch. So as we get into the back end of the trading week and earnings season is still ploughing away, we see that Nvidia and Cisco systems have had a little bit of a role reversal with their earnings, as Nvidia actually topped analyst estimates while Cisco did miss on theirs. So after the bell yesterday on the trading, we saw that Nvidia revenue jumped over 50% year over year, which is quite significant, and their share price is expected to jump over 3% when the market does open shortly. So let's just take a look at the numbers then. Revenue came in at $7.1 billion versus 6.81, and earnings per share $1.17 versus 1.11. So, to say Nvidia's expected run is insurmountable is to say one word, because the stock is actually up 125% year to year on date at the moment, and it's fresh off its debuting new hardware software, which includes its metaverse platform called Omniverse, self-driving vehicle initiatives, and artificial intelligence work. But the company, like a lot of other chip makers, were hit in 2020 by the chip shortage that has actually been apparent for a lot of companies, automobile and otherwise. Excuse me. So we're just seeing now at the moment if shares will spike upwards, but then have quite a big retraction when a lot of investors do see if there's going to be any more of a sell-off in the market at the moment going into 2022, to see if there's more chip shortages as well. And like I said, Cisco Systems did miss the beat as well, as they actually saw earnings per share coming at 82 cents versus 80. However, the revenue was 12.90 billion versus 12.98, so they did miss revenue expectations there. And when the market does open, the shares are expected to tumble over 8% as well, which is quite significant for Cisco. So we'll see how detrimental that is at the moment. So looking at the chart, we're looking at Nvidia first of all today. We're consolidating at the moment, but we are expecting a jump up in the share price when the shares do open, and we'll be seeing if we can top the recent 323 previous top that we saw on the 9th of November, which will be quite significant, because it will be meaning that we test the next top and we'll be pushing higher for more further fresh highs at the moment. As you can see here though, looking very bullish, very far away from the Ichimoku cloud as well, which is the indicator that I'm using today, and nothing too much in the way of divergences. We have had a bit of momentum slacking on the RSI, but as you can see here, prices are coming to the downside. However, when the market does open shortly, if we do see another push to the upside, then it'll be interesting for all stochastics to see if we're going to have another push, and if this is going to be a bit more of an exhaustive buoyant move for the stock. So 323 is where I'm looking at the moment for the market to open, roughly around this area. And if we do get another surge to the upside, as you can see here, the Ichimoku cloud is very far away from trading, so no indication that the price will start pulling back anytime soon. We might get a little bit of a retracement, but not a full reversal on the price. So just something to look out for there. And also Cisco Systems as well, a little bit different from Nvidia in the sense that we are bouncing just off the Ichimoku cloud at the moment, and this is an indication that it could get sucked in, especially if the market opens shortly and prices do fall below the bottom border of the Ichimoku cloud. This will be very, very significant for the stock. That will bring the RSI probably a little bit further down as well, and we'll see what the implementations are going forward there. On the other hand, on the 4-hour chart, we're looking a little bit more of an ascending channel in the last few trading sessions. However, as I said, we are expected to fall out of this channel and pierce the Ichimoku cloud, which will give us a little bit more bias to the downside. So this could actually be quite detrimental for the stock if we're looking at another push to the upside. Obviously, as it stood before, we were looking at some choppy action, possibly another test at this period of $60. However, as things are standing now, we are looking for another push to the downside, but it isn't really too detrimental for the company at the moment. Obviously, earnings season does have a bit of an impact on the stock. However, we're not looking in the long term that prices will start crashing below 50 to $45 in the near term. So we'll just keep an eye on that and all the other comings and goings until the earnings season actually comes to a close. That's all from the Stock Watch today. Once again, thank you very much for joining me. Any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.